There's a lot of people out there saying that this is the week we've been waiting for. This is the week that we could see the AMC stock short squeeze. And although I have my reservations in saying that, I don't know if we're necessarily going to see it this week, so please be cautious. It is always good to be prepared. So I think that we need to talk about a couple exit strategies just in case we do see AMC stock squeeze and you don't get caught unprepared, because the absolute last thing I want to see anybody do is ride AMC all the way to the peak of the squeeze and then ride AMC all the way back down to the bottom. So of course, if that sounds like something you're interested in, let's get started. What's up, everybody? I'm Clay. I'm here to make 2021 the best year ever. If you haven't clicked that subscribe button yet, make sure to subscribe to the channel. Join us. Become a bro. We are here every single day, and of course, we are growing our portfolios together. AMC stock, the short squeeze. It becomes closer and closer every day that goes on, especially as the price continues to ride. Now, why is this week so important? Why are so many people excited about the action this week? We've got quadruple witching coming up on Friday, June 18th. What is that? Very basically, it's an expiration date where we have index options, index futures, stock options, and stock futures all expiring on the same day. Now, what's the significance? If we have a ton of stuff expiring in the money, especially a ton of AMC stock options expiring in the money, that means that the hedge funds, the sellers out there, would have to go out and buy up those shares to cover those calls that expired in the money. And that, coupled with everything else expiring in the money, could potentially cause some margin calls to happen, or at the least, should cause a gamma squeeze, which could potentially drive the stock price high enough to cause what we've all been waiting for, the short squeeze. Now, I don't think it's going to be that easy. I don't think that hedge funds are just going to allow this to happen like that, but it's very important that we have a plan. It's very important that we have an exit strategy when it comes to AMC. We don't want to get caught off guard. We want to know some price targets. We want to know what signs to look for that maybe the short squeeze is happening. All of this. So I believe it needs to be addressed so that every single one of us can get that plan in place just in case this week does turn out to do something good. And if not, we know what the plan is. If not, right, we continue to hold and we wait out the short squeeze. So let's talk about a potential exit plan. What prices should you be looking for? Look, guys, just over the last week, I know a lot of people forget it very quickly that over the last 2 or 3 weeks, we've gone from $12 a share to $70 a share and back down to around $50 a share right now. This is some extreme volatility for a stock. This is not normal price action for a stock. So if you're brand new to investing, don't think that this is how stocks always work in the market and that you're always going to 10x your portfolios in a couple week period. It's not typical, and don't get caught off guard is really what I'm trying to say here. Like, don't get used to this sort of price action. But AMC is going to continue being volatile. Why? For a variety of reasons. We have day traders flocking to the stock right now. We have brand new investors. FOMO buyers are still going to be jumping on. And of course, the hedge funds that will at some point have to cover their short positions. And that's the moment we're all waiting for. So prepare for volatility. Allow that to go into your minds right now so that when the short squeeze does take place, and you see the stock jump up several $100s, and it might drop back down $100, that doesn't mean that it's over, okay? That means the volatility is there. We watched it go from 70 to 50, and now it could blow back up to 500 at any given time, right? We need to be prepared for volatility. Next, what do you need to consider? You need to consider whether or not you want to use a market order or a limit order. Very briefly, because we have some other videos on here explaining both of those. The pros and cons of a market order would be the pro. You will get that order filled. You put that order in there, it will get filled. The con, you don't exactly know what price you're going to get filled at. So if the volatility is real, if you're jumping hundreds of dollars every few minutes or every hour, you don't exactly know what price you're going to get filled at because Although, yes, it will be filled. It comes in the order that it comes in. And since the volatility is going to be so great, you might put an order in at $900 and you might get filled at $950. You might get filled at $850. You just have to see what the market is doing. Now, the pros and cons of a limit order. The pro would be you get filled at the price you want or greater. The con would be if it's very volatile and you put a limit order that's remotely out of the money at that time, you might not get filled. Right? You got to keep a very close eye on your limit orders. So those are the things you need to consider when you're looking at which type of order to use. Now, price. Everybody wants a price prediction. I would love to see $1,000 per share. That doesn't mean that we're not going to blow right by 1,000. It doesn't mean that people aren't going to paper hand it and we're going to see 400 as the peak. So the thing you need to look for on price, you need to stay very vigilant, okay? It's not something that you can sleep on. You need to be watching the price action. You need to be watching volume. So some of the things to look for. If you're not that great at reading chart patterns, okay, support and resistance lines will be pretty much out the door during a short squeeze unless you're using a very, very quick intraday graph. Because think about it, we're going to be hitting brand new highs. So we're not going to have support lines and resistance lines that we can rely on. So some of the stuff you need to look for is the trend lines. If we've got a nice steady trend up, if we're extremely volatile, jumping up and down, these things are going to be very significant because if we're steadily rising and we're not having any significant pullbacks, I don't think that you should be terribly concerned about taking your profit on a small dip. Now, however, if you can't handle the volatility and you see life-changing money in your portfolio, because guys, I don't know how many shares you're sitting on, and I don't know what life-changing money for you is. So it's all relative. When we say life-changing money, it is relative. Maybe for somebody, life-changing money is $100 per share. Maybe it's $1,000 per share. Maybe it's $10,000 per share. You need to keep a very close eye on what is life-changing money for you and act accordingly. Because after this is over with, the hedge funds aren't going to care if you made money or not. There's a lot of people out there that aren't going to care if you made money or not, but you can change your life with this trade. So keep that in mind. It is not selfish to see life-changing money in your portfolio and then think that you're going to hold out for somebody else and then you see all that money disappear. Because trust me when I tell you this, when the hedge funds cover their last short share, they will not be buying any more AMC stock. So that brings me to my last point. I know a lot of people are out there saying, you should cover your AMC, you should go out there and sell your shares of AMC when you see that the hedge funds are done covering their short positions. When you see that the short interest goes back down to zero or near zero, you should cover your short position, or you should cover your positions once the shorts have been covered. That would be an excellent way of knowing that the peak has happened and you're on your way back down. Absolutely. But here's the deal. Once the hedge funds cover that very last short position, they're not going to be buying any more positions in AMC, so the stock price is going to drop drastically. The hedge funds are going to be the only people buying at these absurdly high prices, and when they buy that last share, that's it for them. So if your plan is to wait out until the hedge funds have covered all of the short positions, you may need to reconsider that plan. So although I don't have any price predictions, guys, like I said, I would love to see 1,000. It all depends, and this is what it all depends on. How long can we hold out? How long can you hold the stock? How long can I hold the stock? And how long can all 4.1 million shareholders hold the stock? If we can hold out, they pay the price. If we can't hold out, that's where the price action stops. So it is very simple, but there's nothing simple about human behavior. So guys, I hope that everybody has an idea, or at least this has shed a little bit of light on what could happen during the short squeeze and some things that you need to start thinking about to better prepare yourself just in case this is the week, or at least if it's coming up in the near future, you've got these things on your mind so that you can create your plan A, your plan B, your plan C, and on down the line. Now, guys, if that red subscribe button is still there, make sure to click on it, subscribe to the channel, join us, become a bro. We are here every single day, and we are growing our portfolios together. And look, there's a lot of links down in the description below right now. If you want to check them out, make sure to sign up for Webull and ClayBro.com and all of that good stuff down in the description. And of course, until the next time, I hope that each and every one of you have an awesome day.